Welcome to Northern Vibes, your go-to podcast for everything Northern Denver.
From everything Denver to Fort Collins, we're your local real estate experts shining a light on the incredible quality of life in the area.
We're going to cover local businesses, attractions, events, and interviews with experts, all while educating and empowering you to understand why the Northern Denver area is the best place to be.
Amen, sister.
You bet.
Hi there, it's Ann Wymore with Northern Vibes, your all things Northern Denver area. With me today is
Wilson Miller with Source Mortgage Group.
We also have joining us Alyssa Scott. She is the co-founder of United Credit Advisors, and she's going to be talking to us a little bit about her hometown, Firestone, and then also credit and being a business director and starting her own business. So, Alyssa, thank you so much for joining us and taking time out of your day.
Thanks for having me.
So we were just talking, and one of the big things we were visiting about is that you live in Firestone, and you pointed out like how convenient it was. So could you just tell us a little bit about Firestone and why you love it?
Yeah, so I've lived here for 7 years. I've seen it grow. I'm from Colorado originally, so I'm a native. I've lived in almost every part of the greater Denver area that you can think of, downtown, Morrison, Fort Collins, Castle Rock. And I can safely say Firestone is actually the place I've lived the longest out of all those locations. Small town country vibes, but you have all the essentials. You've got your King Soopers, you've got your Costco, you've got your Target that's coming soon, but you're also conveniently located. So you're 30 minutes from downtown Denver, you're 30 minutes from Fort Collins, you're 20 minutes from Boulder, 35 minutes to the airport. It's just a really nice central location for anything that you want to do. We like to do lake activities, so it's a nice, easy jaunt to Horsetooth. We also like to explore new restaurants, so nice, easy jaunt to downtown. So it's a really great community. It's safe, it's nice, it's clean, it's fun, it's still open air. You still get that country vibe, but with all the conveniences that you need.
Okay, well, I may be moving to Firestone, Wilson.
Well, it sounds like heaven, as he puts it. What about Northern Vibes? I mean, there we go.
Yeah.
Who needs a mortgage in Firestone? I got you.
Yeah.
I also know a realtor.
I've sold some houses in Firestone, but I've never ever heard it really described with as much love and care as I just heard from Alyssa. Like realizing that it is only 30 minutes to Fort Collins, which is probably my favorite city in Colorado, and then 30 minutes downtown, 35 to the airport. I mean, I don't know how convenient you can get than that, mostly in an age where so many of us get to, if we can work from home, so we don't have to be close to like a big city. We don't have I live in Thornton, and we really don't have like that downtown a small community. And so it kind of is, I would love, and I do love like the downtown atmospheres and vibes, because we're such a bedroom community that we were just like built so that we could go to other places. I'm really excited about, getting more restaurants and things like that. But from what you just described, I think that Firestone might be a place I need to check out.
Yeah, and I like that fact too. And that goes for a lot of our clients or listeners, this podcast. As you know, Ann, we deal with it all the time in real estate. Well, location. Well, listen, I live downtown. It takes me 30 minutes to get across town. I'm saying this to our clients, like, guys, if your money goes further up north, you're driving 30 minutes anywhere in the greater Denver area. I don't care where you're at.
Yeah.
So why not explore these northern areas real estate wise more too? I mean, I hear that every single day. Well, I want to be this close, this close. It takes that long to get anywhere, regardless of where you're at.
Yeah. I mean, and don't get me wrong, if it's traffic time, you're going to run into traffic, but that's literally anywhere you go. So it's like, if you just know to avoid the prime time traffic times of the certain way, like roadways that have the heavier blockage, then you're still fine. But there's always back ways. Like you could take so many different routes from Firestone to wherever you're trying to go. It's amazing. So I love it. Don't tell everyone too much about my secret though, because I like to keep it a small town, but it is a really great place to live.
Well, thank you so much for sharing that. So what's your most favorite thing? Okay. What's your favorite restaurant in Firestone?
Well, I'm like a pho addict. Like my
Oh,
husband
I
will tell
love
you, I have pho at least once a week. So there's one right down the road called VN Pho, and they're delicious. The owner Van, so we know the owner. He's amazing. He opened during COVID, and we were like one of his probably most loyal and consistent customers during that whole time. So we got to know him and his son Alvin, who works there. We talked to him about school, but their pho is really delicious. So that's probably my favorite.
I think she's getting a high school invitation when he graduates. What do you think?
Probably.
Well, Alyssa, okay, thank you so much for telling us all about Firestone and the lakes there and the community and the best spa ever. I think I may have to check it out. So, Alyssa, when do you want me over tonight?
Anytime, whenever day of the week you want pho, hot, cold, I'm in.
All right, sounds good. So tell us a little bit about your business. What do you do?
So we are United Credit Advisors. I don't like to use the term credit repair. It's just got a really bad taste in a lot of people's mouths because of the poor choices a lot of previous credit repair companies have made with being scams or taking advantage of people. So I like to call us a credit improvement program. So mortgage industry and the real estate industry is our niche because we're very well versed on a lot of the underwriting things that you guys have to deal with on the mortgage side when it comes to getting a client approved. Also just the process, how it goes through underwriting, what should be on a credit report, what shouldn't be on a credit report, how to read a credit report because no two credit reports are the same. So that's essentially what we do. We're credit improvement along with credit education. That's another big component about credit that I think is a big gap in the industry. A lot of credit repair companies, they know how to dispute things, which really anybody can do themselves, but we don't do that. That's not our process. Our process is a very different process. But in addition, we really emphasize education. So we teach people how credit works. We teach people how it's calculated. We teach them how to maximize positive points so that they can hopefully not repeat the same mistakes they've made in the past and have a better understanding how to essentially manipulate the system so credit can work to their benefit, right? Because credit is a science. It's not a black and white answer. Credit is a very fluid and kind of elusive thing. And so if you could teach people how to understand it, how to make it work to their benefit, especially to achieve whatever goal they're trying to achieve. Obviously, the higher credit scores, the better, but understanding the different brackets of credit scores and what that can mean to you as a consumer is a big part of our business. So me as the owner, I do a lot of operations. I do a lot of the networking. I do a lot of the processes. I do sales because I love sales. I like to go out. I like to talk to people. I like to educate people. I like to travel, meet with lenders, go to seminars, teach seminars. So I kind of do the whole gamut when it comes to credit, all things credit. But yeah, so I've been in it for, about a decade. I worked for another company for a couple years. I did get a lot of my knowledge from that person, which I'm grateful for, but things just didn't work out in the end. She went a different direction. So I was like, well, I can do this on my own. So I found a solid team and built the team. And here we are 5 years later, still just doing credit, loving it.
Well, I want to just say thank you so much to you because, you and I have gotten together a couple times and it's been pretty amazing. Everything that you have showed me, taught me. And so I really appreciate it. So I know this is going to sound crazy, but what makes you a different type of credit restoration company? So I guess how long do you have an average client for? How long does it take for your average client to get through the process? And how many reoffenders do you have? Because you talk a lot about education.
Yes, habitual. I call those the habitual offenders. So our average time frame in the program is anywhere from 3 to 6 months. So conservatively, we average about 15 to 30 points of an increase on credit scores per month for our clients. What makes us much different? One is the education piece, right? Just understanding credit. A lot of these credit repair companies that are popping up are people who saw how to dispute something and thought, I could charge clients money to do this for them, which consumers can do that themselves. They can go into Experian or Credit Karma and dispute things right there. And that's it. That's disputing. That's the credit repair process. Ours is not that. So what we're doing is we're looking for ways to put creditors and bureaus in violations of the various laws that are put in place to protect consumers by proving they don't have 100% accurate or complete information on file to be legally reporting these items. So it's a different process, whereas it's more of an investigation process, right? we're demanding very specific, very detailed, very extensive information regarding each negative item. And if these creditors and bureaus can't provide it, they're in violation of the law. It has to be deleted no matter what it is. With our process as well, as we work directly with the bureaus. So we bypass the creditors at the middleman. That just takes more time because the creditors have to report to the bureaus, right? So the creditors, then the bureaus get back to the creditors, and then that, you know what I mean? So it's like it extends the time frame to get a response. We bypass the creditor. We work directly with the bureaus, working to verify this information. And if the bureaus don't have that on file, it has to be deleted at the creditor level, at the bureau level. And as you know, mortgage lenders, real estate agents, your end goal is to get these people approved for a home. Get approved, buy a home. Everyone wants this done without hiccups. Well, credit is a major factor when it comes to day and age. So if there's on a credit report, if there's dispute verbiage on a credit report, that's an automatic denial for you, Wilson. So now you have an issue with your underwriting system. Or if there's these unpaid collections or paid collections that are holding up the DTI, those are all factors that are going to hold up the whole process, which then holds up your buyer. And then, you have to go and explain to your buyer why they're not getting through yet because Wilson can't go through underwriting because something on the credit report held up the whole process.
Right.
So our process is very familiar with that. And before you pull credit, Wilson, we review the client's credit report, make sure it's 100% ready to go so that you're not running into any issues when you go through underwriting. And then that Anne doesn't have to tell her client, hey, it's going to be another 3 weeks before you're clear to close because you have dispute verbiage on your credit report and the creditor's not responding or whatever the case may be. So,
and I guess I'm just going to add, just because you've taught me so well, is that not all credit companies or not all credit reporting bureaus affect the mortgage process. Is that correct? Like you said, certain scores you have to have. Can you explain that?
Yeah. So I'll give the very high level overview of that. So the bureaus, the 3 credit bureaus, Equifax, Experian, and TransUnion, they do not provide credit scores. That's a big misconception in the industry. They are just big databases of information where all the creditors pay to report to each month. So you've got Verizon paying, you've got your utilities paying, you've got credit cards paying to report to these bureaus, right? So some report to 1, some report to 2, some report to all 3. That's why the 3 credit scores on a credit report are never the same because they're 3 completely separate entities. Now, when Wilson pulls credit, he's using a credit reporting company. So Wilson, do you use Advantage, Credco, Rels? Who do you guys use?
Exactus right now, I believe.
Exactus. Okay. So in the mortgage industry alone, there's thousands of credit reporting companies that every mortgage broker uses different ones. That was just listing a few of them. Those credit reporting companies use these complex math equations called algorithms, right? So algorithms are what calculates the credit score. So when Wilson pulls credit through Exactus, Exactus is pulling the information from the 3 credit bureaus through their algorithms, and that's the credit scores that's populating on a credit report. So Exactus is going to use different algorithms than Advantage. Advantage is going to use different algorithms than Rels, which is what Wells Fargo's uses. So the Fair Isaac Corporation, not to get you guys too lost in the weeds, but hoping you're still with me.
A little.
Or FICO, that's all they do is create these algorithms. That's literally their only job, is to create these complex math equations to calculate credit scores. They have approved 54 different algorithms to calculate a credit score. Fannie and Freddie, for the mortgage industry, have approved 8. So out of the 3 credit scores that Wilson's getting, a different lender could get different scores because he might be using a different 3 algorithms. But Fannie and Freddie, because it's a more regulated industry in the mortgage industry, have only approved 8 of the 54 different ways to calculate a credit score. Does that make sense?
Mm-hmm.
Yes.
Did you stay with it? Okay. So
I get it, obviously, but I think a lot of people might not.
Yeah. But Wilson, now you can explain it to your clients.
Well, yeah, and that's why, what I explain to them in layman terms or for listeners out there, that's why we go in blocks of credit scores, you know what I mean, for the most part.
Yeah.
It's just 580 to, 580, 620, 620, 660, 660,
Yep.
700, 700, 740, 740 plus, you're good. I mean,
Yep.
like in real layman terms, that's why we do that, because like you said, it could be different from lender to lender, algorithm to algorithm, but at the same
Correct.
time, it's usually in the same ballpark.
Yep, exactly.
Rates are based off of ballpark scores. You're 740 plus, it's all excellent. It's not going to get any better because you have an 800.
Correct. Yep.
Actually, that's not true.
Well, your rate's not going to change a whole lot on surface value.
No, but Alyssa taught me something because
We're
Alyssa
talking
and
about
I,
rates,
Not
well,
rates, credit score.
Well, rates based on these chunks of credit scores that I'm talking about. Yeah.
no, let me throw down some knowledge for you that Alyssa taught me.
Okay,
So I'm a little scary. So again, like if any of you guys want to, I only thought of credit as growing credit and credit repair. And I was talking to Alyssa and she's like, there's so many people who want to break into the 800. And I was like, well, I didn't even think that was possible. Maybe that says a little bit about me. But I was like, well, what are they, just like crazy? Like, why would you want to break into 800? Like, what is the big deal with that? Alyssa, why is that a big deal?
Actually, I don't know. I mean, are we talking mortgage reasons? Or are we talking about like what I talked about when it comes to everything else? I mean,
Well, what you were saying is, and so maybe I've got this. Oh man, I hope they cut this out.
I'm like, do tell. What did you say?
Is that if you're self-employed or you're a small business owner and you're trying to get a loan, if you have over 800, your credit score is over 800, you can get a loan.
That might not have been me, but I do agree that the higher the credit score for business reasons is better because it does open the door to a lot more funding as a business because they use your personal credit to start with. So if
That's what no, it was totally you, but it was because I kept asking you.
Now
like,
you're
why?
back to the corner, Alyssa.
I guess.
No, because I was like,
business credit.
because you were saying, because I was like, why do people feel like they have to get above like the 740? And you were saying
the highest credit score is an 850, which ideally, I mean, everybody wants a perfect credit score. Now, for mortgage purposes, so you're right, like mortgage purposes, like Wilson was saying, once you're above a 740, it doesn't matter because you're in that chunk. Now, as far as it goes, like with business lending, business lines of credit, whatever personally that you're going to need your credit for, the higher is better, right? So you open the doors to more funding availability or more access to lines of credit. I mean, an Amex, so that might have been what I was talking about. Certain Amex cards. We talked about a lot that night, so it was all over the place. So that was probably in there when someone asked a question about it. But like Amex cards, those unlimited ones that everybody strives to get, you have to have above an 800 credit score for some of those, like, the unlimited ones, things like that. So there's a lot of things, a lot of doors that open when you hit certain thresholds of credit. Mortgage, it's your benchmarks that Wilson talked about. Credit limits, credit cards, insurances, everything else, the higher the better. So it does open a lot more doors. So I don't know if 800 was the specific number, depending on which card we were talking about.
I just wanted to show Wilson.
Yeah, no, you're right.
I mean,
but in certain things,
it makes sense.
Above 800 is a thing.
Yeah, it makes sense. And like more opportunity for funding, as she's saying, like we would use the term more investors.
Right.
There's more investors out there that might open their doors to you with higher scores, which again, maybe more options, different terms, better terms, etc.
Yeah.
Well, and a little thing, like I guess Wilson, I just wanted to throw down that knowledge because Alyssa, myself, and another realtor named Laura Griswold are hosting classes the third Tuesday of every month talking about credit. And so one Tuesday we're doing credit restoration. The next Tuesday we're doing growing your credit. And we're really focusing on younger people and people who are just entering the marketplace or getting their first jobs or starting to move out. Like, how do you take care of that credit so you don't get into a bad situation? Or just to be aware of like how to move forward. And then our third class was how to break the barrier, how to break that 740 and to get it higher.
That's cool. And that's especially young kids. I mean, with my understanding, it's building healthy trade lines. People that don't have any credit or their parents paid for everything, sometimes they're in the worst position when they come to buy a house. Go ahead and get the credit cards. I'm not condoning maxing out debt, but start building healthy trade lines and usage of these cards. They want to see how you manage debt, not how you have none.
Correct. Yep. And that's a big chunk of our clientele too, is people who buy everything cash. They try to go buy a house. They can't get approved because they don't have any credit history. And there was a video that was floating around social media. I'm not a big fan of social media because it does put a lot of incorrect information out there. But there was a mom recording her daughter. I don't know if you guys saw this. And she had a credit card. And her mom was like, she was on the account reading like what transaction she had. And she's like, why does it say pay now? I already bought this. And the mom was like, you have to pay it back. She's like, well, I already bought it. Why would I pay for it again? Like, this daughter did not comprehend that to use a credit card, that's not your money. You have to pay it back. So it was just such a funny video because I was like, this is our youth right now, unfortunately, because they're not educated on this stuff. Nobody teaches it. So it was pretty wild.
Right.
Well, Alyssa has taught me a lot. I can't wait to like teach more. But one of the things that we can do as parents is we can actually put our kids, only if you have really good credit history, you know you're going to pay that bill. Do not like share your dysfunction with your child. But if you have if you have like a 740 or you have a 700 and above, you can put your child on your credit card so that they're starting to get a score even when they're 10 or 11. You just make sure they're not a signer. Is that correct, Alyssa?
Yeah, so you can add them as an authorized user and you can choose to not have a card sent to them. So basically they're just inheriting that trade line history. And lenders, they use that stuff sometimes too. If someone's trying to apply for a house and someone needs to increase their credit scores a little bit, inherit some account history. It's an old school hack that works great for kids, right? Add them as an authorized user on one of your longest standing credit cards that has good payment history, a low balance, all on time payments. Because as parents, some of us have had credit cards open, not me, but some parents have had credit cards open since the early 90s, late 80s. It's like, if you've had a credit card open that long.
Early 90s.
Yeah. See, that's great credit history that a kid's going to inherit before they even turn 18.
Yeah, we use that all the time. Authorized users.
Yep.
Well, but then
long trade lines, the length of the trade line, the credit profile of those are great.
Yep.
Yeah, again, not condoning debt. Do not give the kid a card.
No.
Put their name.
Don't give them one.
Going to help out. That's it.
Yeah.
Although I think that that's like another thing that we forget is that when we're paying, like when you go to pay off your credit cards. So again, I think it's great. It is wonderful to like keep your balance to, if you can pay it off every month, I think that's what really credit cards should be the best, that's the best case scenario, right? But I know that you were saying, I'm like, wait, I did have credit cards in the early 90s, but guess what? I'm pretty sure I didn't know anything. So I'd probably gotten to a certain point in my life and I'm like, oh, I'm just going to close this one. I just paid it off. I'm just going to close it.
Yeah.
Where I should have left it open. Yeah. That should have been like the one credit card I kept forever instead of like, oh, I'm going to move one debt to another one. Cause we always get those offers, 0% financing for the first
balance
year.
Transfers. Yep.
Yes. And you forget that you're losing then all that trade history. Like I had no clue. So yeah, I'm lying. I do not have credit history back to the 90s. I mean, yeah, I've had credit cards since then, but I don't have the same ones. So that's something else that I think is great to learn.
Closed accounts are a big problem in our world. Closed accounts are somewhat of a derogatory mark.
Yeah.
If you're done using a credit card, cut it up. But the account's still open.
Sometimes, I mean, if it's not used,
they do want to see some activity every now and then.
Yeah, or they'll close it because a lot of accounts.
When I'm just telling people blanket advice, I'm like, to prove a point, I'm like, or put it in your safe. Stop carrying it around, whatever the case may be.
Yeah, put it in the safe.
Don't close the account because then you do, like Ann was saying, lose all that history.
Yeah. Well, in some credit cards I've seen, some have been tricky. Like I think it was a Capital One. I don't know which one exactly. But if it wasn't getting used in like 6 months, or I think even less, Capital One was closing it. Which to me, I'm like, I don't think they should have the ability to just close a card just because someone decides not to use a credit card for 6 months. So I always tell people like the best practice is put small purchases, like put your utilities bill on a credit card and then set up automatic payments of at least the minimum every month, because that's like $90, max a couple $100 for utilities, and you're making the minimum payment, you're keeping it low, keeping a small, like 10 to 30% utilization balance on a credit card at all times is what's going to give you the most positive points. As soon as you get above that 30%, it deducts points the closer it gets to the limit. If it's at a 0, you're not awarded as many points because it looks unutilized. So it's really finding that perfect balance on the scale that's graded like this, an exponential curve, right? This is the section that's going to give you the most benefit. Do that with 1 or 2 cards, keep it open. And plus a lot of these have great points and rewards and benefits and cash and travel miles. Like take that.
Well,
I'm headed to Jamaica on some points. So
I tell them if we're doing quick credit advice, which we don't dive in depth of what Alyssa does, but quick advice to get a rapid rescore to get you approved for a home, or whether it be a secured card, whatever card it is, whatever you're about to pay cash for, just put it on your card. The groceries, the gas, and just use it for that, Go home, pay it down, you know what I mean?
Yeah.
But if you're about to pull out your debit card, stop and think. Because that credit card is giving you probably 5% back in some fashion. Travel points, or just straight up 5% cash back. To be honest, if you manage it properly, it might be cheaper to use it.
100%. And then you're not giving your debit card information to all these random stores and locations that get hacked all the time.
Right. Because cash is taxed before you get it in your bank account.
100%.
Now you're making 5% back on your credit utilization. If managed properly, again, it's really a good way to go. Like my parents are even, another good way, like you said, the utilities. They've always done their utilities on the credit card automatically, and that's it.
Yeah.
Things that over 10 years did all sorts of travel points from paying your cable bill.
Yeah. Exactly. I mean, that's the express toll. Like I have that linked to a credit card. No one wants to see express tolls come out of their account when they're trying to get somewhere faster than the traffic. That's on that. Make that payment, getting points while getting charged to drive. It's perfect.
And let's recap for the Gen Pop out there watching this. We are not condoning. We are talking about things that you have to have. Groceries, gas, utilities, things that are household requirements for life, not Amazon packages, shopping, and a nice lavish night out at the bar like I might.
Mute Wilson on here. I don't really need to hear that, Wilson. Like
Negativity.
Who's in charge of the mute here? I don't know. Sometimes Amazon comes in handy there, Wilson. So, Alyssa, I have a question for you. What if someone like me got a hold of it and maybe bought some stuff on Amazon and I'm having trouble paying it off multiple cards? So, what do you think of debt consolidation?
Big no. That's like the worst thing anybody could ever possibly do. So now there's different types of debt consolidation. There's debt consolidation programs, which big no. Basically what that does is you're paying a company to let all of your accounts go delinquent until they're charged off, and then they settle directly with the creditor for a lesser amount than you owe. You don't need to pay somebody to do that for you. You can let all of your own accounts go delinquent and settle with each creditor that's threatening to sue you, because you'll get served. You'll get served by a sheriff that says, hey, this creditor is going to take you to court unless you call them and settle this right now. Perfect. I'll do that right now. Settle that debt. But in the meantime, you're destroying your credit. Late payment, charge off. That will take you years to get your credit back to a point where it's even decent. So one, you paid a company to settle, let all your accounts go delinquent to settle something you could do yourself, and you just destroyed your credit for the next 10 plus years. You put yourself in and actually we calculated for one of our clients who came over from a debt consolidation company to help us fix their credit. We calculated their debt that they started with and what they paid in full to the debt consolidation company. And it was more than the debt that they originally started with because of the fees. So you're not only paying more than the debt that you already are trying to get out from under, you're paying fees to a company to do that for you. So big no on that.
Crazy. I ended up going through that, Alyssa. Sorry to jump in. Like in my early 20s, I had 18 grand. I'm like, well, I'm never getting out of this. And then the debt consolidation sales pitch came to me. And they were basically like, I can't remember what it was, but it took 2 years and jack shit happened.
Yeah.
And I spent, like, they wanted $5,000 in fees. And you start breaking down the math like you said. And then I was going to pay half that balance.
Yeah.
Now I'm at 14 grand.
Yeah.
The total balance was only 18 to begin with.
Yeah.
And it took me a decade to get any just decent credit back. And it was years of the process took 2 years. So you're kind of stuck in the limbo in that period too.
Yeah, because you can't do anything and you can't apply for credit. Everyone's going to deny you because it puts that on your credit report too. Currently working with credit counseling services. The second any creditor sees that, you're automatic denial. Nobody's going to want to lend to you. Nobody's going to, like, you're screwed. You are literally at a standstill until that whole process, including fixing your credit, is done. Now, the other debt consolidation, which I am for, is like consolidating debt. So say you have a bunch of high interest credit cards and you're like, man, this is getting really out of hand, but your credit scores are still good, right? They're not terrible. They're still decent. You're just getting out of hand with high interest credit cards. You can go pull out a personal loan from like Upstart, Nest Egg. There's all kinds of these online things. Go to them, pull out a personal loan. They'll ask you what it's for. Is this to pay off high interest credit cards? Yes. How much do you need? This much. They will fund your bank the next day so you can pay off your high interest credit cards for just a one lump sum loan at a substantially lower interest rate. So this is just moving debt around, right? You're not paying it off necessarily, but you're getting yourself out of the interest trap, because once you're in that interest trap of 25% with each of these credit cards, you're never catching up. You're pissing on a fire. Whereas if you pull out a loan in that amount, but at 6 to 8% interest, you can pay that off substantially faster than you could all these credit cards.
Or finance with your boy.
That too. There you go.
What was that, Wilson? What, Wilson?
Cash out refinances is basically the same philosophy, using your house as equity.
Yep. Which I did that as well. So I've tried all this. That's how I can speak to it. Before I bought my house, I pulled out the personal loan to pay off high interest credit card. And then when I've had my house in Morrison for 9 years now, and, you know, credit cards got a little out of hand at a point. We're all human and there's easy money. So I pulled out my HELOC so I could pay that off. And I paid my HELOC off in 6 months. What would have taken my credit cards probably 3 to 4 years to pay off, paying the minimum. It's just substantially smarter. You're saving so much money. Mm-hmm. So that's the good debt consolidation, not the programs, the good kind.
Right.
And so what all do you work on with people when they come to you? So do you help them like find maybe a loan from Upstart? Do you help them like know what to say when they want to dispute something? Like what are some of the services that United Credit Advisors teach us?
So when they enroll, we do a soft pull of their credit report. We can't pull credit because we're not lenders. So we do a soft pull of their credit reports. And we do what's called a positive credit analysis. So we do a line-by-line analysis of their credit report. We go over everything that they can do on their end to increase their credit scores. We provide all the resources that they'd need to do that. And then we work on all the negative items on our end. So whether they've got 5 or 500 negative items, we're going to work on all of them to get as many deleted as quickly as possible. So it's a 2-part program, the education piece, giving them their homework, and then us working on the negative items. They don't have to do anything with the negative items. That's what we handle. But they do need to do their homework when it comes to the positive credit aspect. It's just like, you know, saying, hey, you have this credit card that's 0 balance, go put a small balance on it. Or, hey, you know, all you have are retail cards. We highly recommend that you get an actual credit card because retail cards are not calculated in your credit scores like an actual credit cards are. Just things like that. Or the debt consolidation. Hey, you have a lot of high interest credit card debt. Your credit scores are still decent. You should maybe. Now, we really don't like to tell our clients to apply for lines of credit because their goal is to get a mortgage. Yeah. We don't want them opening things if they don't have to. Mm-hmm. However, if it's going to help expedite that process, then we're going to advise them accordingly, right? Or if they're like, hey, you know, like Wilson said, I'm starting to drown in my credit card debt. What's another alternative that can help me before things get bad? Then we'll recommend that kind of stuff. But ideally, it's getting rid of negative items, teaching them how to properly utilize positive credit, get them back to you guys to get approved.
Wow, that was like some great information. I can't even so how expensive is it?
Yeah, so we're one of the most affordable programs, that I've come across. So we do have an enrollment fee. It's typically $180, but if they're referred by people like you guys, our preferred affiliates, they get a $100 discount. $80, that starts everything. So that sets up their account, gets their positive credit analysis, gets their team of credit advisors, launches their investigations, sets up their online portal. Then from there, we only bill after the month of work has been completed. It's $99 a month thereafter. It is month to month. There's no contract. Our job is to get the clients where they want to be, get them on their way as quickly as possible.
I will add to that, like a lot of people, we combat that a lot. Your value is what you do for a living, and the $99. There's a mental thing that when you're paying for something, let's call it a seminar, let's call it going to Tony Robbins, they charge you a certain amount of money because you retain that information. You're gonna follow through with that practice. You're gonna pay the gym. You're gonna probably go to the gym more when you have a gym membership or whatever. I feel like paying that $99 a month keeps what your goal is top of mind. It's not you're spending $100 a month. You're keeping credit repair top of mind. You're creating a healthy habit. You are, you know what I mean? Like, I feel like it's almost more valuable than somebody doing that for free because you're not going to pay attention. You're not going to have it top of mind. You're not going to take it seriously. And when you're paying $9,900 a month, is not a lot, but to a lot of people, it may be at the time, especially in tough situations. But they got to realize that means you are committed to something. And that's just ultimately bettering your financial situation.
Yeah. And that's
actually
how we see it. No, I totally agree. Like that's how we see it is if you can't put aside the $99 a month to invest in yourself and your better future, then you're not going to be able to buy a house. I mean, 99 in the grand scheme of things to buy a house, that's barely a utility bill. So if you think you're trying to buy a house, but you can't spend $99 a month on credit, what situation are you going to put yourself in when you do buy a house? But the 99 was what broke the bank. You know what I mean? So I think it helps people kind of understand, like when you're buying a house, you got to prioritize a lot of other things, not just I bought a house.
Yeah, I mean, that's it, man. Priorities. That's the thing. Where are your priorities when you're trying to borrow hundreds of thousands of dollars if you don't have $99?
Yeah.
Your cell phone bill was $120.
Yeah, 100%.
You know what I mean?
It's exactly what mine is.
And it's not, it's a mindset thing we're talking about here right now. For those people listening, it's a mindset thing. Yeah, I get it. An extra $100 a month. Yeah, you might be strapped. I understand that. But that's bigger picture mindset. That if you can't come up with $25 a week, I guarantee you're probably spending on Starbucks or 7-Eleven.
Or DoorDash. That's one order on DoorDash.
And just take it seriously and take that payment and pride that you are bettering your situation.
Well, and I have a pretty sweet realtor deal that I'm the realtor. I have a pretty sweet lender deal that my lender actually, once you get yourself out, if you kept the receipts and you kept everything you paid and you went through the program and increased your credit score so that you can buy a house, he'll actually pay you back money at closing for all those classes you took. So that's pretty sweet. I just need to say, like, if you have a deal worked out like that, that's pretty cool. And in all honesty, Alyssa, I just really wanted to say thank you because, I mean, while my credit is something that I know I would be in the 800 group if I would have known some of the stuff that you're saying. I mean, like I said, I would have had a credit card since the 90s. A lot of different things would have happened. And I think there's a lot of information out there that is misinformation. So when, like Wilson and I have talked about this with different people about how make sure when you're working on something, you're talking to the right person. You're getting educated by the right person and not just someone who is trying to sell you something or they don't have your best interest at heart. Again, Alyssa's most likely client is someone who only works with her for 3 to 6 months. So if you would have said to me, oh, I usually work with clients for 2 years, and then they come back to me after a year, that's really not someone I think I want to do business with. But if I talk to someone who's looking out for my best interest and they're trying to get me to the point where I don't have to use them anymore, that's who you need to go with. So make sure that you're interviewing and asking the right questions to anyone that you're seeking information from. So Alyssa, can you give me 3 different questions I should ask anyone who wants to counsel me on credit?
who wants to counsel you on credit?
Like,
Or if
how would the general
if I were
public
going
interview
to
people like
someone.
you to make sure they're not getting screwed over?
Yeah, okay. So fee structure. Okay, so what do their fees look like? If they're charging you a large upfront fee, highly illegal. So in fact, for us to charge ahead of the work being done in this industry is illegal. Big red flag. Contracts where they lock you into a set time frame, like, hey, if you sign this contract, you'll be with us for 2 years. Highly illegal. They can't guarantee work. So if they say, this is floating around TikTok right now, so I'm glad you brought this up. TikTok it's called a TransUnion sweep. Okay, this is the biggest scam going on in credit repair for the last couple years because somebody figured out how to try to cheat the system, but it didn't work because they went to jail. If someone says they can clean your credit within 3 days or a week, like if it's a time frame that seems too good to be true, it is. By law, the bureaus have 30 days to respond to any inquiry regarding a credit profile. So if somebody says I can get your credit cleaned up in a week, big scam. What they're doing is they're falsely filing fraud reports, police reports with the bureaus on your behalf, saying that all of your negative accounts were fraudulent. And that's how the bureaus are removing it. But it's being investigated. All the credit repair companies that were doing that are being fined. One lady got arrested. She's serving jail time. So guarantees, upfront fees, short time frames, big red flags. Those are things to look out for.
Oh, that's great. That's awesome. Thank you so much. Like I wouldn't have some of those questions like, yeah, makes sense, but I think it goes with anything. If it's too good to be true, it probably is.
Yeah,
And
it
then there's
is.
an added layer too. If you trust Ann's company or my company as advisors, and we give that Alyssa as a referral,
Right.
there's another layer of trust that should be there too. Who referred you in the first place?
Yeah. Well, and we're 100% referral based, have been for the 10 years I've been in the industry, plus 5 years that we've been UCA. We don't do advertising and marketing. You can see on our social media, we don't have some crazy following. We don't even have a TikTok. We're 100% referral, word of mouth. So like the affiliates and partners we work with have worked with us for years because of that reason. Our only job is to get your clients back to you or whoever it is to their end goal and get them on their way. We have no incentive to hold. If you referred somebody to me and I kept them in the program for 2-3 years, you're never going to refer me again because you never saw that client again. So,
well, yeah. And it is a we are in sales, and I make a living doing this. You would think if you're the general public, we have a mutually beneficial reason for doing this here.
right.
As much as I want to get families and homes, I also do this for a living.
Right.
So it's kind of like, I hope I'm referring it to people that aren't bogus,
Yeah, exactly. And that's easy to look up too. Other credit repair companies, ask them, Google them on the Secretary of State, how long they've been in business. And I can tell, or if they've had a different name previously. I won't name names. There's some other credit repair companies that change their business name quite often. There's a reason. So I'll just leave it at that.
Well, Alyssa, thank you so much for joining us at Northern Vibes, all things North Denver. And before we let you go, where can we follow you? I just heard no TikTok.
No TikTok.
Where can we find you? How can we reach out to you? We'll make sure we add all of your contact information onto our Facebook page and make sure the information is also added to YouTube. But how can we get a hold of you?
Yes. So we are on Instagram, we are on Facebook, we are on Twitter, we are on LinkedIn. Our handles are UCA Credit or United Credit Advisors, depending which platform you're on, or our website, ucacredit.com. You can always submit a questionnaire about your particular questions or circumstances, and one of our team members will reach out to you. And then email info@ucacredit.com.
Nice.
Thank you again. And before we go, I want one more question about Firestone. So
Yes.
what is the most unique? You've lived everywhere in Colorado.
Mhm.
What's one of the most unique things about Firestone?
It has a really good community. So everybody's really involved. Like the holidays, the downtown, so we call it the Tri-Town area. You have Frederick, Firestone, and Erie. It's all kind of one and the same. But they're 3 different towns, right? So there's like a Christmas parade and stuff that goes downtown Frederick, or they all have their little holiday parades or downtown festivities that they're all really aligned and everybody's really communicative and they're all set up. And then we have a Facebook page for the Tri-Town area. Like, it's just it's a great community. Like, everybody helps everybody. Everybody's involved. Everybody goes to the small town gatherings and everybody's nice. That's big. That's hard to find a lot of nice people in one place these days. And we're pretty nice up here.
Well, thank you so much. And like I said, I kind of want to check it out, but I know you want to keep the population low.
Only nice people allowed.
Okay, well, I think I'm okay then.
Yeah, you're good.
Don't get Wilson's opinion.
Yeah.
All right. Thanks, Alyssa. Take care.
Thank you, guys.
Later.
Thanks for listening. This is Ann Wymore with Navigate Realty. And if you missed important information from this episode, check us out on Facebook at Northern Vibes Colorado.
And this is Wilson Miller with Source Mortgage Group. Also follow us on YouTube at Northern Vibes CO.